Hey guys, gonna be doing something a little different here today. Normally I am the one that usually brings up a stock that I like and I try to tell the community about it. But this time I'm kind of asking for viewers to be telling me about insurance stocks that they really like. Now, I'm trying to get more exposure to the insurance industry. I was making a little pie chart of the different industries all my different stocks are in, and I noticed I don't have a lot in the insurance industry. I, of course, own United Health, UNH, but definitely need to add more stocks that are in the insurance industry, which is very compelling because anything basically that the insurance company gets as premiums and the difference between the amount that they have to pay out in terms of an actual damage or liability, they get to invest that money, and that can be some pretty big returns depending on the year that it is, what the investment is in. So that's why people are very attracted to the insurance industry. So I'm just going to talk about 3 stocks that when I was doing some research that seemed to really stick out. But if you guys know of any good companies that I should take a look at or that you're invested in yourself, please let me know in the comments. As always, be sure to like the video and subscribe. Very close to 100, and it would mean a lot to get there. Aflac is the first stock we're going to talk about. It has $140 billion in assets compared to just $116 billion in liabilities. It's constantly been making around $3 billion in earnings. And of course, Aflac has 36 straight years of dividend increases. You're going to start to notice that as a common theme in the stocks that I go over. So these companies tend to consistently be paying dividends, and they also seem to consistently be increasing the amount of dividends. So Aflac Dividend Aristocrat only needs 14 more years to become a dividend king. It has also averaged a 7% growth in the past 10 years and only pays out 26% of its earnings as dividends, and it's able to invest the rest of that back into the company, and hopefully in the future will continue to be able to increase that dividend. So that does it really for Aflac. Trades at a pretty low PE ratio there of 13. Market cap about 40 billion. It's been around for a while as well. Founded in 1955, headquartered in Georgia. It gives protection basically to health and life insurance policies, products. So Aflac is the first stock I'm thinking about buying. Let me know what you guys think. Second one we'll be looking at today is TRV, or Travelers Insurance. Now this stock has really boomed in the last 5 years, up 57%. And Travelers is actually a Dow 30 stock, and I don't think a lot of people, they might be aware of it, but they really hardly ever acknowledge it, probably just because the industry is just so boring. Insurance is not one that has the glitz and glamour of technology or anything else like that. Travelers also offers commercial and personal product casualty insurance and has revenues of about $30 billion a year. It's grown its earnings per share by about 5.7% annually over the last 10 years. And Travelers gets most of its earnings from its fixed income portfolio of about $70 billion, which produces an after-tax yield of 2.6% or $1.78 billion. Now, Travelers will invest in high-grade bonds that are essentially risk-free. If you're borrowing money from the government will always be able to pay you back because they can basically just print money out of thin air. So company has paid dividends for 150 years, which is absolutely amazing. It's also been raising its dividends for 15 consecutive years at an average rate of 9.1% annually, and only 31% of its earnings are to cover its dividends. So plenty of room for growth there. I like how Travelers has a low payout ratio, consistently been paying out dividends. It's been up a lot here in the last 3 months, so you also get that capital appreciation. Right now, definitely thinking about buying this one. Let me know what you guys think. A lot of these companies do a lot of international business. Travelers, a lot of them do business in Switzerland and all those other European countries. Headquartered right now in New York, 30,000 employees, and it's been around since 1853, so almost 200 years. Very reliable, very consistent, and again, very boring. That's what people love about these type of stocks and this type of industry. Then the last one we're going to go over is Chubb, ticker symbol CB. It has also been up quite big in the last 5 years, 40%, and has also been paying dividends again. This year it increased its dividend for the 53rd straight year, which means that Chubb is one of the few companies in the world to be a dividend king, which is 50 straight years of increased dividends. Has a very low starting yield, about just 2%, and it has pretty slow dividend growth as well. In the last couple of years, it's only been going up a little bit. But the good news is it only has a 28% dividend payout ratio, so still plenty of room to grow the company as well as continue to increase that dividend in the future. Now, a con about the insurance industry is that it has very low brand loyalty. It's a sector where people are just going to flock to whatever the best price or package is. They're not really going to care about their relationship with their insurance provider. And also natural disasters, they seem to be on the rise in recent years. So of course that's horrible news for insurance companies, because then they're going to be having to pay out more to people who have their insurance and claims. But Chubb does have a very solid balance sheet with $167 billion in assets and $117 billion in liabilities. So those are the three stocks that I was just taking a look at. Let me know if you guys have more to add. Really, this is just me asking you guys what stock I should add to my portfolio to get exposure to the insurance industry. I'm sure you guys have something to say. Let me know. And as always, be sure to like, comment, and subscribe.